Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, November 6, 2020. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. I'm a little bit under the weather, so my voice might be cracking a little bit, but the show must go on. So I'm releasing this video as well. Stocks are approaching new records. I'll show you potential cup and handle patterns on both NASDAQ and S&P 500. These are bullish patterns. Small caps actually outperform and are approaching new highs as well. And we have already several sectors and industry groups that are hitting new all-time record highs. Look at cannabis, as finally states are relaxing and people are relaxing about this. We'll look at how to trade speculative stocks, and I'll give you an example of a stock called Residual Technologies. Junk bonds are confirming this move higher. They're correlating, they move together in lockstep with stocks, so they are moving higher together with stocks. Treasuries are basically trading sideways, but I'm still a little bit concerned about the way it's behaving. And dollar is approaching 52-week lows. This is helping gold, so I'm going to try and show you how I time my entries, and we'll look at 4-hour charts as well. And Bitcoin just went to the stratosphere, but I think that stratosphere could become outer space. It could easily go higher, and same goes for Ethereum. Okay, so S&P 500, this is daily chart. These lines, the green, blue, red, yellow lines, are my stock, proprietary indicators. They're called MasterCharts Trading Price Action Indicators. You can have them on your chart as well. And this is the only time I'm going to mention it today, and I'm going to mention it one more time at the end of the presentation, so I don't annoy you with advertisement constantly. So here what we're seeing is a S&P 500, which is approaching all-time records. All-time records were set back here in early September. Breakout, as you can see, occurred back on April 29th of this year. And occasionally I get into discussions with, my friends and some people on the internet. Do you see any fundamentals? Do you see anything on this chart that will show you, price to earnings ratio or fundamental of the economy or unemployment data or anything of that nature? No, I don't see it either. The reason being is you don't really need it. The way stock market works is all of those things that I just mentioned, such as fundamental analysis, unemployment data and things of that nature, it's already baked into the price. And this is one of the central tenets of technical analysis is that price discounts everything. So it's already discounted. Back here in March, people understood what was happening, and they understood that there was no expectation of GDP going through the roof. There was a collapse here. So this breakout is actually all I needed to know. This close above the blue line, 29th of April, is all I needed to know to make a decision that the stock market is no longer in a bear market. Back in March, yes, I contemplated a bear market. In fact, there is an opportunity right there on the 27th of March, but I didn't really take it. I was just showing it for educational purposes. The reason being is because shorting stocks is significantly more difficult than going long. And one thing I did, use in my analysis is the fact that they were passing those trillions of dollars in bailouts basically on a daily basis. So that's another reason why I just didn't really feel like shorting. So this is as fundamental as I will get. But other than that, even if I didn't know anything about the legislation and the trillions of dollars that are being spent, then I would have still bought here on April 29th, because that's all I needed to know. The price has discounted all of the news. The price has discounted all of those ideas that were floating around about the collapse and about people not being prepared, and some people thinking that the world will end. The world clearly didn't end, and we got a rally. So we're approaching all-time records again, and this pattern here where I'm hovering, so I'm going to trace it out. It looks kind of like a cup, and there's the handle, what I'm hovering right now. So this cup and handle is a kind of classical pattern. Again, I don't really care about them, but some people do, and I'm going to show you how some traders would estimate where the price would be once this breakout occurs. In other words, right now the price is 3,500 or so, but if it closes above maybe 35, maybe 3,600, then I think we could easily move about 10% up, and that's a very conservative target. And this up move would be before something will happen, like for example some sort of a stop of moving up. I don't know if that made any sense. So for now, I'm just looking at this chart and I'm seeing very bullish chart. In other words, we should be looking for buying opportunities within the stock universe. And this particular chart, I wouldn't be buying it right this instant. I would have been buying it back in April, and I would have been holding it. But yeah, a breakout above recent records could easily put us into the 4,000 territory for S&P 500, easily, if not higher. Same goes for NASDAQ. Here's that potential cup and handle. So all-time record was set on 2nd of September. Pullback, kind of almost got to the all-time records. Now we're again approaching all-time records. So this is kind of like a cup and handle. Some people will argue with me, I'm sure, but I really don't care about this patterns that much. I only care about what level to buy at. And so for NASDAQ, an excellent buying opportunity again was back in April, and that's all I needed to know. It simply closed above the support resistance lines, and the support resistance line is clearly visualized in this case by this blue line where I'm hovering right now, and this led to just a huge run, over 40% run. So see how easily it is, and I didn't really need to analyze any fundamentals. Small caps, so several alerts. You can see up arrows, actual alerts to my subscribers. This is latest one, the 23rd of September, already at new high for the move. It's not yet a high, a 52-week high. 52-week highs are back here, and I think record highs are even higher, if I'm not mistaken. Maybe, yeah. But, the fact of the matter is it's still in an uptrend. It's bullish. And it, again, clearly very easy. Look at this latest one. It's like a no-brainer. The price was above the blue line sometime in August. It came down. It touched it on 24th of September. Then I just simply thought, okay, I'm going to remove my brain and I'm going to start buying here. I did that. And absolutely correct. So we're moving towards new records. And it's a good sign. IWM, the small caps being also a leader right now. It's if you look at fundamental perspective, that's a good sign for the economy, showing broad participation in the economy. Now, you can also argue that this is not really a participation, but it's just an effect of money printing. And I will agree with you. But the fact of the matter is we get paid in dollars. We don't get paid in fundamental analysis. And in this case, the dollars when we bought was 144, and dollars now are 165. So yeah, clearly a gain. without thinking of fundamentals. XLV Healthcare, so this one is already at new all-time records. This is right there, again, alert back in April, and you would have just sat in this position for a while and did nothing and just trailed it. I usually trail at the blue line itself. I do take profits, so I would have probably taken some profits around the green line, and then simply advanced my stop to entry or to the blue line itself, and then trail it higher. And look, we're already at new records, so there is a strong chance we're going to continue making new records. Another concept is overbought, oversold. So is this overbought? Sure, yes, but it's also extremely strong. So those overbought, oversold concepts are not very useful. So when you will learn how to read the candlesticks, the overbought, oversold concepts become a little bit more useful. And I occasionally actually use the overbought, oversold concept, and I'll show it to you when we get to the dollar and gold, because on the shorter time frame you can actually see that very clearly. But the fact is that if the stock is overbought, it is also indicative of strength, and people like to buy strength, so it makes sense, right? So don't overthink about the overbought, oversold concept. Don't overthink about fundamentals too much. Just look at the chart, and the chart will tell you exactly what to do. Another example is XLB, Basic Materials. So back again in April here, all the information I really needed was that it closed above the support resistance lines where I'm hovering, actual alerts again. And at that point we just buy and sit in a position. So I would have probably bought right there, and I would have probably been still okay, unless I may have been stopped out here. But you can also trail at the blue line itself, and then you would not get stopped out, and that's almost 30% gain, and it looks like it's set to continue. Here's biotech XBI. So a while back I got into some, not really an argument, but more just conversation on StockTwits about how for some reason biotech is not bullish, and I'm like, but it's at all-time highs, so how can it not be bullish? And yes, it's overbought, but it's also very strong. So for me, those concepts, overbought, not big deal. What I really want to know is where the price is. So the price back in April was exactly where I wanted to be, and it was on closing. It was closing above the blue line. Right this instant, I would just do nothing and I would just hold it. So, and again, I would be trailing at the blue line and taking profits as I go along. Very straightforward system. Here are semiconductors, XSD, again at all-time record highs. This one is even stronger. So back, again in April, again entry opportunity on close above the blue line right there, and it just never looked back. I mean, it just kept going stronger and stronger, and it just flew again way up there. So yes, you can see how overbought it is, and you can also see how strong it is. So let's just keep an open mind and avoid locking yourselves into this rigid thinking. And in trading, I think it's very important to be extremely flexible with our thinking. Here's one example of very flexible thinking, I think, is this is cannabis, YOLO, relatively new ETF. I think I already highlighted this one, but maybe not. So this one, what I really liked about this chart is the way the indicators kind of got close together. So you can kind of see that distance between the yellow and the green line here was, 5.69 points. But back here, for example, back in July, the distance was 10.4 points. So that's twice as much. So let's pretend that the stock back here in July, it broke out above the blue line. So I would have had to buy it up here and put my stop at the yellow line. But that would imply a risk, a significant risk, a $7 risk. Whereas here, where I'm buying, you see how close they're together? So that's only $4 risk. So what I really like about this chart is the way the indicator lines kind of collapsed together, kind of got closer together, and this is indicative of a narrowing of a trading range and a very strong potential for a reversal. So if back here clearly it was in a downtrend, because you can see it was near 52 lows and it was below this yellow line, here it became clearly in an uptrend. But the distance that the price traveled from May into October was not that great. So it is almost traded sideways. And then just a little bit right there on 7th of October, actually got in as well, but I got stopped out. So if you didn't get stopped out, that's a sweet, almost 30% gain, 27% gain. And again, I think it's going to continue. So this looks like a genuine breakout. I think we're going to see a significant move higher. Now, why is this happening? Well, clearly we're relaxing, and I have strong opinion about keeping things illegal and jailing people for this kind of thing. Finally, I think we're becoming enlightened in some places. Oregon just completely decriminalized drugs, I just applaud them. Do we really need lock people up for this? No, we have so many other problems. Do we need to keep jails full of people who smoke weed? It's a joke, right? But I talked to my friends who were alive, back in the 50s and 60s, and they tell me that it took many decades to bring about this change. So, in a sense, virus has accelerated time and accelerated change. It's difficult to say how fast it's going right now, but I think it's definitely accelerated the change. And we may see more of this type of things, more legalization, because why bother? They're already getting huge amounts of taxes. It's similar to alcohol, the way they sell it. So people who drink alcohol, they pay tax, on alcohol consumption. The same way people who smoke cannabis or use cannabis in other ways pay tax on consumption. And the states are getting the money. Right now I'm hearing pretty much everybody is broke, all the states are broke. So this is just makes perfect sense to me. So I think we will see more of this type of thing. We're going to see more legalizations and more relaxation of just general anxiety about drugs. The anxiety is way overblown. Anyway, so that's just my aside. Okay, so I wanted to share it's not really a trade, I didn't have a chance to get in, but I wanted to show the way I think. So it's actually very similar to what I just showed for cannabis stocks. This is Residuo Technology. Now, I have no idea what they do. It sounds like some sort of maybe a real estate investment trust or some sort of a technology firm to deal with real estate. The fact of the matter is, as early as March, here June even, it was in a downtrend. It was way down here, near to 52-week lows. Something happened. Again, I have no idea what, but there's that breakout where I'm hovering on 23rd of July. And this is real time, so you can see, actually I can replay if you really want to. And I'm gonna, replay it from this point, and you will see that I'm not making it up. So this is the way the price moved, and this is the way the indicators looked back then. And there's the breakout. So you could actually start buying it right there with a stop at yellow line. There's another opportunity, another breakout. So you can, continue watching it, but there were several more opportunities in the future. So there is about to get to that. There's the opportunity, another opportunity on the 21st of September, and then another on the 28th of September. Several more opportunities here. And then the latest one was just recently on the 3rd of November. And then it skyrocketed. I mean, look at this move. 72% move. So this is the type of stocks, I call this speculative stocks. Really don't know what they do, relatively low volume. Nobody really knows what they are. But the pattern, the important thing is for me is to have the correct pattern, and this is a correct pattern. Narrow trading range, so the distance between the green and the yellow line is narrow here, versus how wide it was back here in April, for example. So the more narrow the trading range, the easier it is for the price to get up to the bullish levels. And then we just buy it. Buy it and close above the blue line, put a stop at the yellow line, and enjoy the ride. So this happens on quite often, this type of breakouts. And again, you can buy you could have bought option here, and the way I estimate the way the option moves, it's 3 times. So if this was 72% move, then it could have been easily like 200-300% plus by now. So this is the type of thing I send out to my subscribers in my new newsletter called The Stock Speculator, if you're interested, of course. Junk bonds. So junk bonds, generally speaking, move together with stocks. They do kind of similar things. Junk bonds actually broke out a little bit earlier than stocks. So junk bonds broke out where I'm hovering on the 9th of April, while S&P 500 broke out a little bit later on the 29th of April. So this was a very good sign for me. Notice how nicely it is several times already. One time here on 22nd of May and another time right there on the 30th of June. It just came right where we wanted. We want the price to come to you. We do not want to chase the price. So let's say you missed an entry and you're like, oh well, there's so many other opportunities. There are literally hundreds of other opportunities. So don't need to chase. Just wait for the price to come to you. So looking at this chart, junk bonds seem to be moving higher together with stocks. So in my mind, this is confirming my bullish posture because junk bonds and stocks move together, correlate. So treasuries, on the other hand, are kind of just blah, doing nothing, with actually a downward tilt. Not a great looking chart. I actually have a position myself, and it could easily go south. In fact, here is Treasury bond yield, and Treasury bond yield is not that far off from bullish levels. Bonds and yield move in the opposite direction. So if we see a yield above 1.83, where I'm hovering for the 30-year bond, I will be exiting my TLT position. So in other words, around the red line here for TLT, which is at 151. We'll see if it gets there. I mean, we can still see a breakout higher. It's entirely possible. So there's TYX. All right, and now let's switch gears and start on what's called continuous instruments. So what is a continuous instrument? So for example, S&P 500 SPY ETF. It's an exchange traded fund. Notice I'm going to zoom in. See how there are gaps? Like, for example, gap between 27th of October and 28th of October. So that's called an opening gap. So in other words, there were no trades here in between those two prices. But if we look at futures, you can see that it was a continuous trading. There was no break here, no gap. So this is what I call a continuous instrument. Now DXY, dollar index, is what's called a CFD, or contract for difference. We cannot trade it in the United States. It's not available. But in other places you can trade it. So you can actually trade this particular security. So DXY is in a downtrend, and it started its downtrend back in June. It's a killer opportunity to short it back at the very end of June. And since then, it's basically been just, trending down. We're very close to new 52-week lows. Now I'm gonna go to 4-hour charts. I'm just gonna show you what it looks like on 4-hour charts. So here's I call it the fireworks on the 3rd of November at night. This is during the election night. It looked like dollar was gonna go higher. That's a signal right there where I'm hovering to go to buy it, but it didn't last. And on the 4-hour chart, I would have shorted it right there where I'm hovering on the 4th of November at 2300 candle, and I would have been correct. So right now, I mentioned at the beginning that I don't really worry too much about it being oversold, overbought. So in this case, definitely oversold. So a bounce is likely. Now, where would the bounce take us? So a bounce would, normally takes us somewhere to the support resistance area. One good level is at 92.6. An even better level is around 93. And at that point, it should bounce and we should short it. It didn't happen yet. So in the United States, it actually is a moot point because we cannot trade it, but we can trade the opposite of dollar, which is gold. And notice what it says, XAU over USD. So if DXY dollar index is getting cheaper, is getting weaker, XAU USD, the gold, is getting more expensive because the bottom part of this equation got smaller, so the top one got bigger. Now, unfortunately, there was no good opportunity to get in very recently. The latest just killer opportunity for gold was back in March, on 23rd of March here, which resulted in over close to 33% gain for gold. But the way it's looking, it's possible that dollar might pull back a little bit. So let's look on the 4-hour chart. So on the 4-hour chart, there's the breakout where I'm hovering the 5th of November. This was already a successful trade. Now, if dollar pulls back, DXY, if dollar continues higher a little bit, this would weaken gold. So maybe we'll be able to get in, on a slight pullback. Remember, this is 4-hour charts, so it's pretty short-term trading. Here's silver versus US dollar XAG USD. This one just broke out as well on the 4-hour charts. On the daily charts, you can see pretty decent opportunity here on 24th of September and another one here on 29th of October. Actually, both of these trades would have been successful. This one was an actual trade. This one I did not send this out 29th of October. That's why it's a purple purple arrow. So what I'm hoping for is dollar would weaken, or rather dollar would strengthen slightly, maybe towards the 93.60 levels, and then by extension gold should weaken a little bit. And if it does, then we can maybe get in. We'll see if how far down it will get. Another alternative scenario, it doesn't, and it just goes to new records. Now, I don't see a bear market for gold anytime soon. So bear market for gold on daily charts would need to, right this instant, get down to 1684. And let's look at Bitcoin. So Bitcoin just skyrocketed to new highs, new 52-week highs. currently at 15,000 rather. I had a position, I already told it many times. So if you bought, and these are actual alerts back in April, if you bought it back here and you did nothing, and you simply trailed it at the blue line, then you would have been just perfect. Right now, the way this candle looks, especially from yesterday, this candle right there on the 5th of November, this sure looks like it's about to pull back. I just don't see this type of appreciation without a reasonable pullback. So a reasonable pullback would take us to 1394. A excellent pullback currently will take us to 11,400. We'll see where it gets us. And Ethereum, here's Ethereum. I actually have a position. I bought Ethereum here on 24th of September. You can buy it too. You cannot short it for example, in Robinhood or other brokerages, but you can buy it, and it's just a nice tradable security. Another, poorly correlated to S&P 500. It does its own thing, and it moves crazy. So you kind of need to be ready for large moves, hopefully in your favor, but sometimes they go against you. So you need to be ready for when it goes against you. In this case, everything worked perfectly. So I entered on September 24th right there at 344.84 on Ethereum. For Ethereum, and sat in the position for a little while. Another great opportunity back in October, 7th of October here, when it touched the blue line, then it went up and it got to my target. My target is not that big. My target is 2 average true ranges. So where I'm hovering, it's called ATR. This is a public indicator, so you can find it where I'm hovering. If you click on indicators and look for average true range, there it is. It's just a measure of how much a security moves on this particular time frame. Did you get that? This is a daily chart. So an ATR for daily chart is currently 21. But if I go to, for example, 4-hour chart, you can see the ATR is 11. So this is important to understand that on each time frame, the average true range, how much the stock moves or how much security moves on average, will be different. So in this case, the ATR when I entered was about $30 or so, and this is, I set 2 average true range target. So once the target was reached, I advanced my stop. I actually sold a quarter and I advanced my stop to entry. And at this point, there is no way I can lose. Important, again, psychologically, for people to be comfortable with the trades. That means they cannot lose. So at this point, I'm still holding 3/4 of the position, and it's up 33%. So I'm just very happy. And it looks like it's about to go to new records. It's about to break out above the early September highs. It does look that way. So if that happens, we could see a nice move higher still. Anything is possible. It could just collapse, but it does look very bullish, and it became bullish back in May. You can see actually 3 alerts here, 3 opportunities for about 100% move. Okay, well, that's it for today's recap. Head over to MasterChartsTrading.com. You can also go to everyonecantrade.com. You'll get to the same place. Click on products and select one of the products. So we currently have 3 products. One is basic newsletter, and here in basic newsletter you will get alerts about things like ETFs and common large cap stocks like Apple, Facebook, JP Morgan, things like that. Everything is on newsletter, and there's an internal blog. You get free trial and all that. If you want the indicators, in other words, these lines that I'm showing, the green, blue, red, and yellow line, you can have them on your TradingView chart. All you need to do is get a free TradingView account and then buy my indicators. They're $30, so I think it's a steal. You can make. So I had a client who bought YOLO cannabis. I think he bought an option here, and he made entire year of subscription in one trade. So it's $29, $30 per month, and it's about, what is it, $400 per year, and that he made it in one trade. So he paid himself already, and he paid for my service, and then down the road he can just keep using it. Now I think the best deal, of course, is to get the ultimate bundle, because not only you will get alerts about ETFs and the common stocks, you will also get alerts about things like Forex, commodities, gold, and cryptos. And also you will get a stock screener. So the stock screener is, it would show, or rather it would send you alerts about things like this. Breakouts, above the blue line. And there are literally hundreds of those breakouts. So you need to kind of limit what you want to trade. And we are working currently on several additional opportunities within the stock universe. So you can have S&P 500, S&P 200 or so, and then we're working on more lists. So you'll have mid cap and small caps, and I have a list which is stocks that have options, and there's like 4,000 stocks. So I'm gonna keep making it more manageable for people, because that 4,000 stocks would generate good 100 opportunities like this. So sometimes I just sit there and I go through them, but I'm trying to figure out a good way to make it even more user friendly. So we're working on that as well. So that's the stock scanner you will get with Ultimate Bundle. And finally, the Stock Speculator, a new newsletter. And this is an actual, I mentioned this particular stock, but I didn't get a chance to send it out as an alert. So it kind of ran away from us. But like I said, there's many opportunities. I keep showing the same one, for example, NEO, and NEO just went to new records. But yeah, it's the same general principle. So you can see a very tight trading range back in April. I actually bought it myself on 27th of May. I bought calls, and it was a huge profit, 400% profit overall. And I had 4 exits on this trade. And notice that it just keeps going. So sometimes I wonder if I should sell so early. It's definitely overbought, definitely overextended, but it's crazy strong. Okay, so this is it. If you have any questions, let me know. Otherwise, thanks for watching and have another great trading week. Bye-bye.